This episode is going to be shorter, but hugely important to you navigating home buying, particularly in the wake of a lot of what's been going on and the shift that I see a lot of companies moving toward when it comes to you being able to get a loan to purchase a home. Recently, I mean, this week on Monday, it was announced that Rocket Companies is buying Redfin. So you may have heard of Rocket Mortgage. They're a pretty large mortgage company. Redfin, also a pretty large mortgage company, and has a lot. Both companies really do a lot in the digital space in terms of technology and utilizing technology to try and help the consumer experience, basically, with being able to purchase a home, get a loan, all of that. Well, these two giants, so to speak, in the real estate and finance space are merging together. They're coming together rather, with Rocket buying Redfin. And so one of the things that I think a lot of people are going to be overlooking as this shift happens is going to be really key in your success, particularly as a home buyer and a first-time home buyer especially. And so what that is this shift from the way that things have traditionally been done and still are done today toward more of a platform on which you can do mortgages from your phone, a platform on which you can utilize your phone, see interest rates, see options available to you, pick and select, different things that you want, and you can basically do it without the interaction of a loan officer. Now, full disclosure, I am a loan officer, but I also fully believe in utilizing technology to better your experience and to help educate as well. And that's what I want to drive home today, is that education piece, because that's what I believe is going to be missing in a lot of the push or the shift to technology. There's going to be a lot of push, and you've already seen it some, and you're going to continue to see it even more with a push toward companies moving toward, hey, you can download our website, download our app, pull in your credit report. You can see what you qualify for. You can see what your interest rate pricing is going to be. You can select your different loan options. And that's all great, except particularly if you're a first-time home buyer, you have no idea what any of that means. You don't know what discount points are. You know what an interest rate is, but you don't even know why you should select one interest rate over another. You might not even know why, in some instances, it may be advantageous for you to buy down your interest rate versus just selecting one interest rate that is lower because it seems better. The lowest interest rate is not always the best interest rate. It actually might be the interest rate that ends up costing you more money that you're not going to make back before you end up selling or refinancing that home. These are things that a mortgage advisor, aka a mortgage loan officer or a mortgage loan originator, is going to be able to help you navigate and understand. So that's what I really want to drive home, is that all of the tools that you're going to have available, and they're going to become more plentiful as you see more companies shifting toward a digital platform that will allow you to go in and do whatever it is that you want to do concerning getting a loan. Understand that companies exist for the purpose of making money. These are not nonprofits. They're not here just to be a resource for you and not try and get business from you. They exist to make money. Now, when I say that, I don't mean that companies are just out there to try to take your money. They're just out there you have good companies out there that really want to help you. What I'm saying is that a lot of people are going to get caught up in I can just go on the fill in the blank website, or I can just download your favorite mortgage company app, and I can see what I qualify for. I can see the interest rates. I can see the down payment assistance programs and how much money I'm going to get for down payment assistance. I can see all of these things. And so I really don't need a mortgage loan officer. I want to put a pin in that for a minute. And let's take this to another profession. Let's say that you are going to, you need to go to court for something. And let's say you're in a legal battle. Maybe you're getting sued. Maybe it's something, on that scale. Do you forego legal representation because you have an app that can teach you about what you need to say in court? Or do you say, you know what, I'm going to be much better with someone who's knowledgeable in navigating the legal system, knows the laws, knows what I should say, what I shouldn't say, knows the angles at which we should attack this thing, knows knows what's going to best help you to fight whatever court case you might be dealing with. Most people are going to go with representation, but let's just take a different approach when it comes to finances. And most people do, they take finances into their own hands. However, if you look at most people's finances, most people struggle to save money. Most people struggle to invest money properly. And most people would like to blame it on the fact that they don't make enough money. However, if you were to, let's just say for the next 6 months or the next 12 months, give it 1 year, that you were to just reach out to a financial planner, talk to a financial planner, have them look at all of your finances, your spending, where your spending goes, how much money you're making, where you're investing, or if you're not investing, where you should be investing. Give them 1 year to help you get your finances in order and see if that doesn't make a difference at the end of that 1 year. If you don't have more money, if you don't have more money invested and more money growing at a higher rate of investment, if you don't have more money being saved, if your money's not being spent wisely, or at least a much better than what it was being spent prior to you actually talking to a financial planner and listening and following the instructions that they actually give you, it makes a difference. And you can see it because the people that tend to do better financially have financial planners. And check this, you could actually get a financial planner without being rich. There are financial planners that don't have minimum income requirements in order for them to give you a consultation and for them to be able to assist you with whatever financial goals you have. So it's worth it to reach out to a financial planner in order to at least get yourself going in the direction that you need to be going when it comes to your finances. Because again, having someone that's knowledgeable on how to save money, how to invest money, how money can grow. If you've got debt you're trying to pay off, they've got mechanisms and different tactics that they can teach you about on how you can reduce your debt more quickly to get you to a better place financially as well. Again, most people, they forgo the advice of a financial planner and they just think, okay, I know I need to pay off this debt, so this is what I'm going to do. But they miss so many things that decades later will have them in a worse position because they could have been, let's say, hundreds of thousands of dollars richer. They could have been even tens of thousands of dollars richer, but instead of soliciting the advice or the consultation of a financial planner, they just went with what they thought was going to be right based on what they read in the news or what they saw on the internet, or what they heard from a friend or family member who also is probably not receiving advice from a financial planner. They just heard a good video on YouTube. But in any case, what I'm saying is you need to reach out to a subject matter expert. And with this push that you're going to see in the mortgage industry with more and more companies pushing technology, do not think that that is a substitution for having a great mortgage loan advisor. A great loan advisor in the form of a loan officer, a mortgage loan originator that can help you navigate where it is that you need to be in order to purchase a home, that can help you navigate your finances in ways that you can actually use the home, if you already have a home, to refinance and maybe pay off some of that higher interest rate debt that you have. These are some of the things that you might not get from an app, or you might not get from an AI platform, in terms of having an advisor that's going to look at your complete situation. Because I get notices frequently from the mortgage company that owns the mortgage for my home, the one I live in, saying, hey, you've got equity in your home, you could pull that equity out. Someone who's unadvised might say, oh, wow, I can go pull $50,000 out of my home. I can go pull $100,000 in equity out of my home. And that's great. But a mortgage loan advisor is going to say, hey, let's take a look at your situation. Do you have any high interest rate debt? Maybe you've got $10,000, $20,000 worth of credit cards that you're paying 20% interest rates on. Let's look at how we can pay that down. Let's look at how we can get that equity out of your home, maybe at a 6 or 7% interest rate, pay off 20% interest rate debt, end up saving you $3,000 over the next year, or however much, time it's going to take you to get that debt paid off. but they're looking at things from a further vantage point. Maybe it ends up saving you $10,000, $20,000. There's a lot of different ways, but a great mortgage advisor is going to look at all of these things and look at ways. Hey, you got this car note. Maybe we pay off that car, pay off these credit cards, bring your debt down to zero with the exception of this one mortgage loan or this HELOC. Since you already have a low interest rate debt, let's not refinance that home, because refinancing that home is going to take you out of that low interest rate that you have and put you into a higher interest rate for the total balance of this loan. Let's look into a home equity line of credit, because that home equity line of credit is going to allow us to access that equity without touching that low interest rate loan that you already have. So we'll just put the higher interest rate on a very small portion rather than a higher interest rate on the entire thing. Again, these are things that you are going to get through a great loan advisor, a great mortgage loan advisor. You're going to look at options when you're looking at a AI platform, when you're looking at a software or an app that says, hey, this is what you should do. This is how you should go about it. But when you're talking to a great mortgage loan advisor, it is a game changer. So do not be confused. Do not be led astray, as you will see many people led astray, because you're going to have friends, you're going to have family members that are going to say, hey, you should use fill in the blanks app or whatever. I was able to go on their app. I could see what I got approved for, and I could click the interest rate that I wanted, and boom, I have my mortgage loan and I'm happy. They're happy because they might be ignorant on what it was that they actually could have done to put themselves in a better position, saving themselves more money, costing themselves less money up front if they had been better advised on a better option or a better route to take, especially because some of the route that you should take is really going to depend upon what your plans are for the home that you're looking to purchase. How long are you looking to stay in that home? Are you looking to turn this into a rental property or not? What are rental rates in that area? These are things that are going to be important. It's also the same reason why having a great real estate agent is important in terms of you being able to select the right home and negotiate the right terms that are going to work for you as well. Because you can absolutely purchase a home without a real estate agent, but you can also, like we mentioned, do your own finances without a financial planner. You can go to court without legal representation. There's a lot of things that you can do without subject matter experts who are advocating for you in those areas. But by doing those things without that expertise and that expert guidance and advice that you're going to be getting from those people who are advocating for you, are you really going to be in better shape? And that's the thing that you need to be taking away from this, is that there's a lot of things that are going to be thrown at you in terms of the DIY model. Do it yourself, go online, use our platform. No need for a loan officer. It sounds good, but then when you put it in another context, oh, there's no need for a lawyer. You can go to court and represent yourself and save yourself the money. You don't have to worry about paying a lawyer. You don't need a lawyer. You would be thinking, okay, you're trying to set me up for failure. But you do need the guidance with, having representation that's going to help you in that area. So that's what I have for you. Hopefully, like I said, it's going to be shorter, but hopefully it's beneficial for you so that you can see that this is what's to come. So as it's happening and continuing to happen more and more, remember, this is what I told you is going to happen, but you're also going to remember that I still do, even though I'm using the tools, and I'm not saying don't use the tools, use the tools, but even though you're using the tools, I still need to talk to a mortgage loan officer. I still need to talk to a real estate agent, whatever the area is, financial planning. I still need to talk to a subject matter expert and let them know this is my situation, but these are also my plans and my goals. And how can I best, utilizing where I'm at right now, achieve my goals in the shortest time frame possible? That's what I have for you. Thank you for taking the time to tune in. As always, check out Home Finance Hacks on Tuesdays. I'm talking about all of the tips, the tools, tactics that can help you save thousands of dollars, tens of thousands of dollars when it comes to you purchasing a home, particularly if you're a first-time home buyer, but it also works if you are a repeat home buyer as well. So you definitely want to tune in on Tuesdays right here on YouTube, 7 p.m. Eastern time, going live on Home Finance Hacks. So I look forward to seeing you on Tuesday. And until next time, take care, be blessed, and we'll see you in the next episode.